On today's edition of For Pete's Sake, we're going to be talking with Peter about the 200-day moving average. Will it be touched? What happens when that happens, if it happens, and more coming up. And with me now is Peter Haag. Peter, how's it going?
I'm doing well, Alex. How are you doing?
I'm fine, Peter. Thank you. Now, let's start with the 200-day moving average. Now, that 1301.20 level has been flirted with quite a bit today. Now, I mean, what do you make of it? Should that level be breached? Do you expect it to be breached? What importance do you see in this number?
Well, I think it's significant that we need to watch that average. But as I mentioned in yesterday's commentary and reinforced somewhat this morning, there's a lot of noise in this market as the April gold options come off the board. And there's some significant bets on the $1,300 strike. So, I assume that there'd be some volatility and traders would jockey around that $1,300 level, to try to either mitigate or enhance their profits on their puts and their put and call positions. But again, I think it's too early. I consider this move noise. I'd like the options to come off the board by this afternoon, and then we'll take a look at it. But should this trend on the downside continue after options expiry this afternoon and the 1302-ish level is breached, which is the 200-day moving average, it could be technically negative, and we may get some further selling into the breach of the 200-day moving average.
All right, Peter. Now, there is some data coming out later this week. Obviously, GDP is coming out, unemployment numbers. Now, I mean, do you still put stock into these numbers right now? Or are these critical data points for the price of gold and its movements?
Yeah, I do. I think the Fed still is monitoring, economic growth and economic activity. So in that context, the Fed is very, very much aware of economic data and the potential growth or slowdown of the U.S. economy, which may impact future decisions on their tapering program. But I, again, have been in the camp that it's difficult to quantify where the economy is right now because of the weather events of this year. And, I'm not saying it was all weather related, but I feel as we come into spring, I think the economic numbers will better reflect consumer confidence and where this economy is going. And it is from that point that the Fed would have more ammunition to make decisions on tapering. The way I'm seeing this is I do believe the economy will start to grab some legs in the spring. And I think consumer confidence will increase. And that will keep the Fed on its current tapering path to end the bond buying probably by at current rate by late summer.
Let's move it over to Iraq now. And the central bank, which was reported recently, purchased 36 million metric tons of gold. Now, this is not really a large purchase, but it is the largest purchase made in the last 3 years since March 2011 in Mexico. Now, I want to ask you, Peter, do you think there was any impact on gold prices? Can you quantify an impact it had, if any?
Well, I certainly can understand, a country such as Iraq that is now generating oil revenues again, that they're going to deploy some of those cash reserves into gold. That has been sort of a theme with Middle Eastern economies over the past few years. The question is, I don't know how to quantify the reaction to the gold price. The purchasing of this gold sort of came at a time which coincided with the issues in Ukraine. So I certainly think it helped push the pricing higher while the Ukraine safe haven demand was occurring. But I can't quantify how much of that push from the $1,300 to $1,400 level could be attributed to Iraqi buying of gold, or if it was primarily a Ukraine-driven event. So it wasn't certainly a negative factor. But how much of that gold price move on the upside was a result of the Iraqi buying, it's difficult to quantify.
Now, putting all this into perspective, Peter, what kind of gold ranges do you have for this week?
Well, again, I'm a trader, so to me, levels are extremely important. I think if we can get a good bounce off the 1302 level and we don't breach after this, this options sort of volatility today, I think a move back into the teens and possibly 20s is certainly in the cards by the end of the week. If, however, after options get off the board today, we see a breach of the 1302 level, it's conceivable that more technical selling will come into the market, and then there's a possible target by the end of the week of sort of the 1287, 88, 1290 range. I don't see it much below that, but I think that is a possible target should we lose that 200-day moving average.
Excellent, Peter. Thank you for your insights today.
You're welcome, Alex.
And thank you for watching this edition of For Pete's Sake. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can ask me on Twitter at Alex_Letourneau. Have a good one.